a little while ago, you may have noticed that Property Tribes was joined by a new sponsor. It was the Norfolk Capital Group, and they have some sub-brands. And today I am delighted to welcome Maeve Ward, who is Director of Commercial Operations at Mercantile Trust, one of those brands. And Maeve, it's so delightful to see you because we've been trying to organise this interview for a little while, and we got stuck along the way a little bit. So it's great to welcome you to Property Tribes and also Property Tribes TV.
Thank you very much for having me. I'm excited to be having this conversation with you today and having the opportunity to sort of talk a little bit more about Mercantile Trust and perhaps how we might be able to help some of the people that are active in the forum with some of their lending needs moving forward.
Fantastic. Well, let's start there, Maeve. Tell us a little bit about Mercantile Trust, because each brand has a kind of very specific niche at Norfolk Capital Group, doesn't it?
It does. So Mercantile Trust is very much a niche player in the specialist unregulated bridging and buy-to-let market. We tend to operate very much in underserved pockets of the market sector, so those that would find less lender presence or no presence at all. So a really good example of that would be lending in Northern Ireland. We have our buy-to-let term proposition over there as an example, and we are giving consideration to deploying our bridging proposition into Northern Ireland. We will tend to lend on areas of the market where others do not play at all. So, for example, someone looking to borrow relatively small advance sizes. So we lend anywhere from 25,000 as an example on our bridging proposition, and anywhere from 10,000 and above on our buy-to-let proposition. Whereas most of the sort of buy-to-let and bridging lenders will tend to come in 100 grand and above. So if you've got any property investors, or there's property investors out there that are looking to diversify their portfolio, as an example, perhaps they're looking to come outside of sort of London and South East, perhaps they're looking to move into lower valued property areas where rental growth is slightly higher, so the valleys in Wales, Northumberland as an example, the Midlands, where it lends itself to lower property values, then absolutely Mercantile Trust might be a lender that would be able to support that, because the lower property value would lend itself to a smaller advance size as an example. So that's some of the areas where Mercantile Trust potentially would be able to help where others can't currently.
And if somebody was struggling to get finance elsewhere, would it be worthwhile them contacting you? Because I understand that you have a kind of more kind of bespoke underwriting process. You know, it's not a case of, you know, the computer says no.
So we do have a mortgage desk where people can call in, they can discuss their specific requirements. And I think in the specialist market, it's very important to say that no two deals or applications are ever the same. And sometimes the best lending solutions and the best outcomes are those that are born from a conversation. Yeah. And so we actively encourage that. We've got a team of people, they will respond immediately if they can, if it's done via email or if they call in, but they do work to a 1 hour SLA. So it is a promptly response. Generally, there's only ever 3 outcomes. It's either, yes, we can absolutely do this deal, great news, or it's, yes, we can, but subject to, because obviously it's a referral, so it may be something we agree outside of criteria, or we can't help on this occasion, but please keep us in mind for any future borrowing needs that you might have. So we do actively encourage people to pick up the phone and have a conversation if they are struggling. It's even a case I would go as far to say that perhaps they think they're struggling and they call us, and it is something that we could do if we truly believe that there are alternative lending solutions that might potentially be priced cheaper. We would advise them and point them in the right direction of other people to speak to, as opposed to just taking that deal. So we try to make sure that we are treating the customer fairly, regardless of whether or not that's a deal that Mercantile Trust can do, or whether we think there might be a better alternative elsewhere.
Well, that's very good to know, Maeve. Now, you mentioned bridging finance, and you know, this has come much more mainstream, I would say, in maybe the last 5 years. And we're hearing that tenant demand is going through the roof, which is a great thing for landlords to have. But we've also got the cost of living rising as well. What's your take on this? How can bridging help landlords kind of navigate this very, very unusual market where you've got to act really, really quickly to snap up a deal?
I mean, bridging finance does lend itself to quicker transactions. That's the nature in which you would use bridging finance, really, outside of purchasing a refurbishment project where perhaps you can't go straight to term because it's not going to be deemed as habitable. So they're the two scenarios in which you would generally use bridging finance. If the investor has a portfolio, they can look to release the equity, especially if they're on preferential mortgage rates or they're tied into ERCs. It could just be a case very similar to Main Street lending on regulated mortgage contracts, that in the here and now, refinancing that existing mortgage or that portfolio might not be the right thing to do. It might actually be quite costly to do that. They'd be better off looking to maybe release the equity via a second charge bridge or a second charge buy to let, depending on the circumstances. Mercantile Trust offer both, as you know, so we would be able to consider both options. But what it does do is enable them to use their equity within their portfolio to transact in a timely manner so that they don't miss those opportunities. And I often look to people that have got a big portfolio where perhaps they've got a couple of unencumbered properties and they are looking to grow that portfolio and they want to position themselves as a cash buyer. And so they may look to lenders that would open an open lending facility or a pre-agreed lending facility, should we say. So there are lenders out there, of which we are one, where we would look potentially to secure a lending facility for them, which would enable them to be able to present themselves as a cash buyer. So they could go find their first property, know that they've already been underwritten, their assets already been underwritten, they've got their mortgage offer, they are ready to go, and therefore they would be able to negotiate the purchase price. And then they can continue to come back and use that credit facility to the maximum that it has to enable them to achieve their end goal, which is to expand the portfolio, but using the right finance to enable them to transact that quickly. And that's where bridging finance ultimately comes in. Equally, you can use it just to release equity to do home improvements. Now, it may be that they found a project that needs quite significant improvements, but it may be, if you look at the sort of EPC discussions that are going on in the moment and the regulatory change in 2025 and then 2028, there are lots of landlords that are already looking ahead of the curve. They're already trying to make those changes now. They're already thinking, how can I do that? They might be looking at their portfolio as an example and already identifying the properties within that that aren't so energy efficient, the ones that will need an upgrade. Similar to what I mentioned before, it could be that they're tied into a preferential rate, but they still want to move now. They don't want to wait to 25 or 2028, where the demand might have gone up, the cost might have gone up. They might be struggling for somebody to do the works, and then they're in a whole heap of trouble if they don't achieve that deadline. They can look to release that equity now to make those upgrades now. And of course, then it may come with an added benefit, not only that they are ahead of a curve, but there is discussions in there that whether or not more energy efficient properties could lend itself to slightly higher rents, because there will be some tenants that might be willing to pay slightly more to have a more energy efficient property, because obviously their energy bills potentially would be lower. So there's some of the opportunities that bridging finance could be used for, and things that people should be thinking about right now.
Those are brilliant examples, Maeve, and I'm actually seeing commentary in the media that energy efficiency properties are rising up the list of tenant demands. So I think that's a definite trend that will strengthen as we go forwards with the inflationary environment we're in, and the other challenges about the cost of living. So interesting, those examples you gave, because to my mind, well, first of all, I love an unencumbered property to bridge against. It's such a wonderful thing to have. And we talk a lot about on Property Tribes about whether you should have interest-only mortgage or repayment mortgage. And I think one of the main reasons to pay down a mortgage is to have at least one unencumbered property that you can bridge against. And I think, we're so keen for landlords to understand all these different financing methods, because they're all just tools in the property investor's toolbox, aren't they? And it could be the difference between saying, actually no, I can't do anything, to, do you know what, I can move ahead and take another step forward here.
Definitely, couldn't agree more. It's about making that portfolio work for you, but as you've already said, it's about understanding the right vehicle that will enable you to do so. And you can reach out to lenders direct. Obviously, we're having a conversation today. Equally, they can reach out to intermediaries. And you do tend to find that lots of property professionals will have an intermediary that manages their portfolio. And the good ones will be the ones that are already actively encouraging their landlords, working with them, understanding their portfolio, updating their portfolio when their finance changes, so that they can make sure that they have got the right finance in place at the right time, and using forums like yourself as an example, where they can reach out to lenders and have discussions, as well as being given ahead of the curve notification of regulatory changes as well, in terms of what that means for them and the things that they need to be doing.
Absolutely. Well, we've actually touched on a couple of the trending topics on Property Tribes already, which is obviously the rising cost of living, inflation, landlords very concerned about energy efficiency, how they're going to fund refurbishments. You've given some very good examples of how they could potentially do that. I think the other thing is that we know that the bank base rate has started to rise. And I just wondered kind of what your take was on that. What solutions can you offer to landlords so that they can raise finance without having to remortgage or, you know, touch existing mortgages and incur those dreaded early repayment charges? I guess a second charge is one possible way to go.
Absolutely. Second charge is a really good way to go. And I would actively advise that anybody, and I'm sure they're doing it now, where their existing mortgage is probably up for renewal, they're coming off an existing fixed, or perhaps they're on a variable, they're probably looking or being advised to refix it. I would say that there'll probably be more of a shift towards a 5-year fixed mortgage this time around than a 2-year fix, just to lock in some of those preferential rates for the fear that they'll go up even higher. Obviously, that's great from a mortgage perspective, but just as you've just touched on, they really need to understand what are their goals and objectives moving forward, because obviously once they fixed it, it is fixed. So unless they look to do a second charge, as an example, or they've got some other means of finance in the background through savings to achieve the same goal, it would be costly for them to do that. So there are few lenders out there offering second charge bridging, for one. Those that are around 65-70% loan to value. There are ourselves and a couple of others at 75% loan to value, so you can do second charge bridging. Equally, you can do second charge buy to lets as well. So it really depends on how quickly that they need to transact versus whether they do the bridge or they do the buy to let second charge. But ultimately, it's about planning. So it's then understanding, okay, once I've taken the second charge, ultimately it's either going to be sale of another asset to pay that off, or it's going to be that when the renewal comes up on the mortgage or another mortgage within the portfolio, that they will then look to clear that second charge. But absolutely, second charge lending is a way that they can do that. Equally, if they've got equity within their own main residence, so the homeowner business loan, as an example, that does fall into the unregulated market. So if they haven't perhaps got equity within their portfolio, or perhaps they've got equity but they cannot get consent from a lender, because that's a big topic, I would strongly advise that the property investors have a look at the terms and conditions of their mortgage. Who's their lender, and is there a restriction? And if there is a restriction, is there an LTV restriction? A good example would be if you've got a mortgage with TMW, they will restrict any additional lending by the way of a second charge beyond 50% loan to value. So if you've already got 50% of your equity taken up and you're looking to capital raise, they are not going to grant consent to enable you to do that. So another way to look at that is if you've got your own main residence and you've got equity within that, you can look to do a homeowner business loan. And that's something that Mercantile Trust are just building out a proposition for. So hopefully next time we talk, I'll be able to share a bit more information with that as to how that can help. But that is certainly an alternative, and there are lenders out there doing that today. So if there's equity in your main residence, you can use that to achieve your business goal objectives as well.
Maeve, that's amazing. I've not heard of a homeowner business loan before. Yeah. That sounds a really good tool. And, you know, we're in a position where we have quite a significant amount of equity in our own home. I've never really thought about, you know, releasing it. But also being a self-employed landlord, as I am, I think self-employed landlords have had their own challenges. You know, obviously many of us, our income dropped during COVID. And not only that, if we took, a self-employed support loan, some lenders actually don't like that, and they're a bit reluctant to lend. So it's a tricky one, really. How are you viewing those income blips relating to the pandemic, and also how can you particularly help self-employed landlords? Because I think there's a lot of us out there that could do with some help.
Yeah, I mean, if we were looking to do a homeowner business loan as an example to achieve that release in the equity, then obviously that would be subject to looking at an income and expenditure assessment, because if the exit is then to refinance your main residence, then obviously we have to satisfy ourselves that you would then be able to do that through conventional income and expenditure and stress testing. I guess we're quite privileged because of our sister business that we have quite a lot of experience through Mercantile Trust, which is our regulated arm of the business. And to give you an example how on that side we would view self-employed hit by the pandemic, we take quite a common sense approach. So if we had somebody that was a limited company, and let's say, for example, even a sole trader, and their recent submission that they've submitted is obviously going to show a lot lower income than pre-COVID levels. Obviously, if they're trying to raise finance right now, they're going to struggle because on paper, it doesn't look like they can afford it. The reality is for many businesses, the income has returned, it has stabilised, it is back to pre-pandemic levels. They just can't evidence it. For us in that situation, on the other side of the business, we would actually have a look at that and say, okay, well, if you can provide 3 most recent business bank statements to support that, if you can get an accountant to give a projection that supports that, then we would look at 2019-2020 SA302. So again, the specialist lenders are the ones that people should go and have a conversation with, because they are the ones that will apply more of a holistic underwrite than an algorithm into a system, computer says yes or no. So I would strongly advise, don't panic. Don't think that there are no options. There are always options. They may not be the option that you wanted, may not be at the LTV that you wanted, but there will be an option. It's about knowing who to talk to, what forums to go to, and who you can be referred to get to where you need to be.
I really like that suggestion of a holistic approach, because everybody's circumstances are just so incredibly different, and something that may not fit, as you say, an algorithmic underwrite, it might be something really small that can be easily explained, and if you go to a lender or a broker that can help you with that and find the right match for you, then you could potentially move forward where you've been turned down before. So I'm really enjoying our conversation, Maeve. You sound like such a problem solver and just so open to everything. And I want to encourage everybody watching that if you feel that you need a bit of extra help, do give Maeve's team a call. That's what they're there for. I guess, Maeve, you've got new applications coming across your desks every single day. Are you seeing any particular trends of what landlords are up to, or do you have an opinion on where opportunity lies in the current market conditions?
I think around the sort of whole permitted development changes that have been going on, and obviously with the Article 4 as an example, will present an opportunity. So areas where the local authority obviously could impose the Article 4 and obviously enforce the planning process to still remain, obviously with those changes that will present an opportunity where perhaps people before couldn't turn something into a HMO because it was within an Article 4 area. So I think there are opportunities on the horizon within that. And obviously a HMO is not a safer bet, but it is a safer bet than obviously just a private rented single property, because obviously if you lose one tenant, you haven't lost all your tenants. Whereas in the other scenario, your income is completely gone. I guess we see lots of opportunities around the sort of homeowner business loans that I mentioned. That's one of the reasons we're bringing that product to market. And I guess in Mercantile, because we have the mortgage desk, one of the reasons that we created that is so that we could look at the opportunities that we were presented with and then use that to see how we want to evolve our proposition. And it's really important for us to understand where the underserved segments are, where people are struggling, so that we can then use that MI and say, okay, how can we evolve? How can we help more people? And use that data to bring these products to market. So it would be the sort of Article 4 changes. It would be sort of using homeowner business loans. We are looking at sort of expats that don't have a UK footprint. We've got bridging that we want to do in Northern Ireland as an example, because there's very few lenders there. So there are lots of opportunities, the weird and the fun, wonderful, and also just the straightforward, because if we talk about bridging just for a second, ultimately bridging is used because you need to transact quickly. And so it's really important, and can be lost on some people, that just because you've got the cheapest rate means that you expect the borrower to wait, and that shouldn't be the case. In bridging, it's about understanding how can we ensure that this transaction goes through smoothly and quickly for that borrower. And so we always look at how we can evolve, how we use technology as an example to enable the borrower to achieve their dreams by being accessible 24/7 by a portal.
Wow.
These are some of the things. It's not necessarily just about product, it's about our overall proposition and how we can transact quickly so that borrowers don't lose opportunities, because sometimes it's not a case of getting the access to the finance that makes you lose it. It's the fact that you couldn't get access to that finance in the time frame that you needed, which meant you lost that opportunity. And that's really important to stress.
Well, Maeve, I have to say you've been an absolute mine of information, and I've really enjoyed learning about how fleet of foot you are at Mercantile Trust, and how you can work with, perhaps if we call them non-standard type of lending situations. It's really, really useful to hear all this. We're very, very happy and delighted to welcome you to Property Tribes. And part of that connection is that your team can come on and answer questions as well. Yeah. And I'm sure you'd love it if they could feed back to you if there is an area, one of these underserved areas where they're struggling.
Please, if you can. I mean, I'm a strong believer and a true believer in feedback is a gift, right? So it's up to me whether I choose to unwrap that. So the more feedback that I can be given, the more opportunities that we can bring to market. So please, good, bad, different, let us know, and we will do whatever we can to try and help.
Well, that's a wonderful offer for the Property Tribes community. What I'll do, Maeve, is I'll put all the contact details, the phone number, the email address, the web address underneath this video for anybody that's interested in getting in touch. But for now, just to say thank you very much for joining us on this call at Property Tribes TV. It has been a genuine pleasure speaking to you and hearing of all the different ways that you can help landlords. And a lot of it actually applied to me personally as well. So it was a very, very interesting call, and I'm sure everybody watching agrees.
Thank you so much for having me.